Hello and welcome to another update video about ADA. ADA has followed the projection nicely and my preferred wave count, which is the yellow one, is currently still being respected. So the idea is still that we are moving here in this 5-wave pattern to the upside, which started on the 23rd of January. This is, however, only the short-term perspective. Maybe let's take a quick look at the 4-hour chart. I always like to do that. We take a look at more complex structures because the ADA chart is a little bit more complex. So the movement from the June 2023 lows continues to be counted, well, I can count it best as really a diagonal pattern or a correction, but because we are in a bullish market, I lean towards the idea of a bullish diagonal pattern, which means we are forming 5 waves to the upside. After these 5 waves are formed, we can talk about the next options because I will then be able to add a support area for a corrective pullback to the chart. But I need to see the 5 waves up first. And the idea is that a wave 1 formed here with this July high. We had a wave 2 pullback, wave 3 rally, wave 4 pullback. Could have indeed bottomed around January 2024, yeah, so this year. And then a 5th wave might have started. It is always difficult when we're dealing with diagonals to determine when really a correction, like for example here in wave 4, is over. Because in normally what we are watching for is a 5-wave pattern, a first 5-wave pattern, which breaks above resistance. Now in diagonals, you don't get these very often. So sometimes we're just dealing with corrective structures, right? We're sometimes just dealing with corrective structures, and because we are dealing with corrective structures, sometimes we only see ABC patterns, so you cannot rely on the signal of a 5-wave move that a correction is over. Let's go to the 1-hour chart. I want to explain that. Therefore, what we often do is to offer these pullback support zones, which actually show that in this region a reaction should occur. And it happened, yeah, in this sector between 43.8 cents and 50.8 cents. Could have gone a little lower, but I didn't want to get it below 39 cents, as you know. Okay, we could still allow for a wave 4 pullback down to the golden ratio level at 34.5 cents, but it would be weaker than ideal, even for a wave 4 in a diagonal. Well, then we had a reaction to it. And after we reached the ideal target, yeah, here for a 3rd wave. So basically the idea is wave 4 finished here on the 23rd of January. We're now in the wave 5. Targets are 85 to 96 cents. But we still said, okay, we're still trying to track a 5-wave move. Maybe one shows, okay? Maybe one shows. Doesn't need to show, so we have to remain flexible. But if one shows, then we want to get wave 3 to ideally 61.2 cents or higher, which happened. And when it did that, I started to add a support area to the chart for a next, you know, anybody who wants to do a bit of scalping or swing trading, short-term swing trading. Their support area was triggered. The price indeed reacted perfectly to the 38.2 retracement, which is, as you might know if you follow my channel, the ideal target for a 4th wave. Often, not always, but it's ideal, okay? And then from here, that reaction showed, and I assume now, even though we haven't broken above the recent high, I still assume the wave 5 has now started. That's wave 5 of an A wave, because this larger 5th wave of this larger diagonal that I showed you on the 4-hour time frame should be an ABC structure, because in diagonals we're dealing usually with larger ABC structures in the subwaves, but an A wave can be 3 or 5 waves. Hopefully that is okay. And now, yeah, I assume a 5th wave is now unfolding, targeting 66.1 to 68.8 cents. This is also a structural resistance area. The price got rejected before, so that should be enough for wave 5. Maybe it stretches a little higher, might touch this trend channel's upper boundary line, maybe around 70 cents. And then, so it could now be, so in one scenario, it could be that this is now going higher more directly. So maybe this was already a B wave, maybe the A wave was a 3-wave move, and we're going up directly in wave C, then it should be quite aggressive. That wouldn't make any difference, okay? So the support area could also have been used for that. Doesn't make any difference at all, but because it reacted to the 38.2 fib level, I assume it was only a wave 4. But if we see a sustained break higher, you know, above these levels that I showed, then yeah, it might be the C wave already. Doesn't really change the trend, wouldn't make any difference really. All that wouldn't happen is that B wave pullback, that separate B wave pullback. It's just that when we get into this region, it might be worth just being very much on the side of caution, or at least be watching for that B wave. What that means for your portfolio, of course, you need to decide. But if a B wave pullback shows, it could be another opportunity, and then a C wave should take us into that target area. So at the moment, everything looks okay. Pretty much going according to plan. It's holding the support area. I can still not rule out that we're going to test the yellow support area. Again, it would then be a very complex WXY correction in wave 4, but it would be a complex one, and I would only really focus on it if we see a break below the upper support area, so below 52.9 cents. Until then, I focus on higher, and I'm leaning towards the yellow count as mentioned already in previous videos. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.